All right, party people on Facebook. Sorry, it's been so long. Been super busy. So much going on. Absolute crazy market right now. And we've got a crazy market in the world, in the national economy. We've also got a crazy local real estate market that's going bonkers. I really hope inventory is around the corner. I believe it is. I've heard a lot of people who've been holding off on selling. I hope they come to market because we desperately need your homes to the market. I'm going to do things a little differently today. Maybe a little bit more raw. I didn't have as much time to prepare as I would like to have had, but I do want to let you know what's going on. So you'll see here, and we're just going to start with looking at what's going on the stock side of things. Today was a crazy day. If you look at the last 2 days, there's been a major battle going on. And as you can see today, we opened up higher, went negative on the day, and then made this huge march, including the end of the day. Look at this march we made higher. Just a statement day, closing well above the 25,000 mark, which was the benchmark we were looking for. But if you look at the last 5 days, you'll see that we had a lot of down days there, and we were down, and it was a really interesting thing to see happen. Let's see here. Can we get this right? It's a little bit harder to see there. Anyway, we've had a tussle back and forth is the point that I'm making. And this tussle back and forth, you can see it now a little bit more prevalently in the news. We know that there's been a lot of things politicized. The whole coronavirus thing's been politicized. It is an election year where Trump has got a major lead in the competition. And we're starting to see, I think, some things get put into action. You'll notice the top story for CNBC, which is a news site that is designed for business, or it's like a business news site, a financial news site. Their top story is U.S. coronavirus death toll rises above 100,000 in world's deadliest outbreak, is what it says. Meanwhile, we're on the heels of 2 huge days in a row, and the futures are up another 200 points. Bunch of people short, including myself, with their pants down on this one. And we're starting to see that there's a huge battle, something that you probably haven't thought of or don't know about. If you watch CNBC, you do. You know who Larry Kudlow is. There he is, Cud. Cud is probably the biggest bull ever. I mean, when he was on CNBC, even during the crash, this guy was all about stocks, okay? He's all about stocks. And guess what he is now? He is now the director of the United States National Economic Council, okay? And he has been since 2018. It even says here on his Wikipedia page, after previous employment as a financial analyst and a television financial news host, which is what he was on CNBC. You got it right. So this guy, if you don't know, now if you just click on, well, what's the National Economic Council? I don't even know what that means. National Economic Council of the United States is this forum that's used by the president for considering economic policy matters, separate from matters relating to domestic policy, which are the domain of the Domestic Policy Council. In other words, anything that has to do with economics, he's going to the National Economic Council, and we already know who the head of that is. That is the biggest bull in the history of bulls, meaning someone who loves stocks, Larry Kudlow. So what you have here is you have an election that's being, where the battle line is the Dow Jones Industrial Average. Why is that the case? You recall, many months ago, years ago, I've been saying this on Smarter San Diego, when the president decided to put his name on the Dow Jones Industrial Average and say, this is my doing, it was something that was going to be under attack. And it's something that has been under attack. And people would say, well, rightfully so. There is millions and millions, tens of millions of people who are out of jobs. All these things that are going on that are not good for the economy 100%. But look at what's happening in the stock market. So, I mean, it's hard to say it's bad. The vast majority of the average Joe out there who owns stocks is long, not short, like my idiot self. So if you look at that, and most people are loving that. Where's it coming from? How's it happening? How? We just reopened. We got tens of millions of people unemployed. How could there be this much optimism in stocks, especially when the day started off really high, came crashing down, back up higher than we opened across the board? We were down. It was ugly mid-morning. I remember talking to my buddies going, man, it really turned against you today. He's long. I'm not. And so we were just up, and it's just, this market does not want to go down. It is a very light market. It wants to go higher so badly, and that's exactly what it's doing. So Those are just a couple things I want you to keep in mind. Now, how does that affect real estate? Okay, as we see this battle for the election is being fought, this economic war is a battle for the election. Make no mistake about it. That's what's going on. So if we know that's happening, we got to take a look at a couple things. Now, this is the mortgage bond chart, which we've been following, and as I've said many times, and it's just a fact, mortgage rates should be much lower than they are. They're not going to go lower until demand ceases a little bit, though. It just won't. None of the banks are tightening up guidelines, not because a lot of people think, oh, well, banks are tightening guidelines because they're worried. I said, that's part of it. But a lot of it is they've got so much to choose from. I mean, if you have 100 loans to choose from, and 25 are A paper, like perfect, 25 are B, pretty good, 25 are C, and 25 are D, I don't know if we can do those. What are you going to do? What are you going to do if all of a sudden, instead of 25 of each, you've got as many as you want of each? You can do the smart thing if you're a banker, which is to make as much money as possible. You know, no offense to the bankers out there, but not known for caring about people. And so when it comes to that, you're going to say, okay, well, let's just cut our guidelines off. Let's not take the B, C's, and D's anymore. Let's just take A's. We have so many A's, we can maximize our processing on these highly profitable and low-risk circumstances. That's what people are doing. So that's what banks are doing. And they're not going to give us these gains. They just won't, unless demand ceases a little bit and then becomes a little bit more competitive. Every single bank that I know of, unless you're a broker's getting thrashed right now. I've got a three-legged deal that the broker's on the first leg. Poor guy. He's a nice guy, I can tell, but he's just handcuffed. He's at the whims of the bank that he's brokering to. And anyway, so let's take a look at the mortgage chart. This is what's going on. So right here we have what's called a classic convergence. This is where you see, we've got one moving average here moving in this direction, right? Moving us higher. This is the 50-day. And then we have the 25-day moving average, which is typically considered to be less impactful or a less, oh, goodness gracious, stupid thing. I'm so sorry. This is actually a great piece of technology brought to us by Barry Abib and MBS Highway. It's user error for certain there, Barry. Okay, so we got this convergence going on, right? Can I get a line here? So what's happening is this trading range has really gotten dialed in, and we're trying to figure out what's what. Now the good news is up here we're in the high 1.3s. So I mean we're in like 1.350 here. So we're in a good place. Like that is great. This is the 2.5% coupon. So this is a huge move. I mean mortgage rates based on this coupon should be at 2%. Maybe less. Maybe they should be in the ones. But we're still in the high 2s, for VA good credit. And still in the low 3s for the most part for conventional, like a couple 3%ers, but it's harder. So you need low LTV, good credit, all that stuff. So what we're seeing here is this is going to most likely break one way or the other, and you would tend to think that it's going to break higher. Remember, we've got the Fed on our side. We've got the Fed in here buying mortgage bonds. And if this goes higher, mortgage rates go lower. So you would sit here and you go, okay, there's a convergence going on. The convergence should have a breakout. We should get the win on this breakout because we've got the Fed. The Fed has our back on this. But the Fed only has so much money. They've been pouring it in here, okay, to keep it this high. And again, we're getting pressure because when stocks go higher, remember this, and here I'll show you the pre-market. Futures up 190. So when there's that much, when stocks are doing that well, investors will rotate out of bonds and they will rotate into stocks. Because why do you want to sit here and make 1.7% or whatever when you could go over here and these guys are making, what did they make in the last 2 days? I mean, what was it? It was you made 2.25 today, in a day. To make that 1.7 on the bond, you got to have it for a year. You're in stocks today, you made 2.2. So you see, this, it's FOMO, and it's a shame, but you can see we're resting right on this moving average, and this is really the key. Come on now, simmer down now. So the key here is what happens. We're resting right on the bottom of this support. That is not a good looking candle. So we see the action in the stock market has got bond investors fleeing, even though we have the Federal Reserve in there. Look at that range. We touched almost the top of the range there today, got all the way down to the bottom of this. This candle here is so important right now. So important. And this is not a good sign. This makes it look, with the stock market action and this candle, makes it look like we're going to lose ground on rates. I'll be honest with you. I pulled the trigger today. Pulled it. Locked loans. I know we didn't get a lock from Barry, but I promise you, if we drop below the support level here, 100% we're going to get a lock call from Barry Beat, which is the person to listen to. Don't listen to me. Subscribe to MBS Highway, okay? But I locked the loans today. And the reason I did it is because I don't like my risk reward right now. I don't like the stock market's on fire. I don't like the economic battle that's being fought, because the current administration has an advantage over the people coming in. The current administration has all the power. So if they decide, hey, we're not going to let the stock market go down, Lair, I mean, this is if you're the president, hey, Lair, this is why I brought you in. This is what you got hired for. I want stocks at all-time records. I want to be the president. This is Trump, so I don't do a very good Trump. I want all-time records. I'm the greatest. No one's ever been as good as me. Everyone agrees. Whatever. I don't have a good Trump. But he brings in CUD because he wants that sucker to go up. And he wants CUD to put things in place. He wants CUD to leak information to hedge fund managers. He wants the stock market higher, and he's got the power. So he's got shorts like me, bozos, shaking in their boots, going, what am I doing? What am I doing betting against this? And right now, the impact, though, and this was the risk, and sometimes, like the Fed didn't realize what they were doing when they blew out the hedge in the mortgage market and started this whole mess, created a catastrophe, made it very difficult for people to refinance. The backlog of mess that you deal with if you're trying to refinance right now was caused by the Fed, 100%. And just a lot of demand. So a curveball by the Fed and a lot of demand is what caused that. But now, if you see this battle for the stocks is going to rotate people out of bonds, it's going to cause mortgage rates to go higher. And that's not good. But granted, it's not like the mortgage market or the real estate market are in shambles and are in desperate need. It's on fire. We need more houses. We have so many people who want to buy, so many more buyers and sellers, so many more. It's crazy. So it's like, I think we could absorb that if it happens, and I think the majority of the nation would be cool with seeing their 401k go up. But man, we're at a very crucial moment right here where things can kind of go a lot of different ways. I locked today. If we can stay inside this range tomorrow, I have a couple more that I will be locking as well. I don't think it's worth the risk. I don't want to personally put my clients in a situation where I go, oh yeah, we probably should have locked. My bad. Because we do have the float down option. If rates get significantly better, we can get up to 0.25%. So we've got that protection if rates improve. It's just part of the strategy of locking a loan. But just wanted you to know what's going on, because this is going to start to get pretty heavy. I wish I could do more updates and keep more of a flow going, and I'm going to really try to, but I've been burning at both ends. It's 12-hour days every day right now, so that's just kind of where I'm at. I did want to take this 20 minutes to just kind of let you know what's going on, because this economic war became very evident today, and it wasn't just this. There's other things I can show you too, but when you see the stock market's up, you see the pre-market's up, but the leading story on the business stock website is coronavirus death toll. Okay, so clearly, you can't hide from the facts, but this would normally be, and then look, coronavirus deaths crossed. So there's 3 stories on the front page here on CNBC. Coronavirus death toll above 100,000, world's deadliest outbreak. U.S. coronavirus deaths crossed 1,000, blah, blah, blah. Coronavirus updates, California guidelines for reopening, blah, 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 and that's live. So they're still running with the coronavirus narrative on the front page. I don't know. We have been out. We were out over the weekend. I think a lot of people are starting to feel pretty okay with everything. I think people are going to the beaches. I see a lot of people acting normal. Still a little bit of, masks and different things, but seem to be, from what I could tell, seems to be pretty darn normal. So are we just back to normal like that? Are we? That'd be great. I do know one thing too that has been underestimated. People getting unemployment are getting a lot of money. So people who are unemployed, that tens of millions of people, which we're going to get another number tomorrow morning, I think, or is it moved to Friday? I think it's tomorrow morning. Even though it's a short week, I think we'll still get it tomorrow morning. We'll see how many people apply for unemployment. It's going to be 2 million plus, somewhere in there, low 2 million plus, more. But these people are getting unemployment. They're getting a good chunk of change for unemployment. In a lot of cases, people are making more on unemployment than they were when they were working. Employers have been having a hard time getting them back in. So we haven't really still seen, I don't believe, any of the economic fallout that might have come from this, because people have still been getting paid. The only people who've really been sort of screwed are people who are small business owners, who aren't going to get an unemployment check and whose businesses just got thwarted. So upper middle class is where you're going to see, a lot of that damage, which isn't as big of a populace as, let's say, lower class, whatever. I don't know. I'm not into classes, but, income brackets, let's say. So that's kind of what's happening. That's what I'm watching closely here. Main thing is mortgage bond market. Got to hawk this thing. We got to make sure we lock people in at the right time. There's a breakout coming. Mark my words. And when this move takes place, I will, no matter how busy I am, if it's at midnight or whatever, I will do a video and I will show you what the heck is going on and what we can expect from here. If we break out higher from this range and this convergence, if we go higher, then we could test these all-time highs for mortgage bonds over here, which, remember, that's when we experience the lowest rates in history. So we could get there, and we could get there pretty quickly. It's 100 basis points and change, but it's about 100 basis points to get to all-time high. So if we can, if we can break above this, but I think in order for that to happen, the stock market can't run like this, and I know who's driving the freaking bus. It's Larry Kudlow. So I just don't know if we can win that war or not. Anyhow, that's what's going on. I should give myself a mini shout out here since we're at the end. A little lower third action, this high school grade production. Everybody have a great night out there. Comment if you want to say what's up. I'll reply to comments later tonight. Share this if you think it's valuable. If you know a veteran who wants to buy a home or refinance a home, have them give me a call. I'll 100% take care of them like they are my own family, like they're my own brother or sister. I'm here to serve veterans and their housing needs. That's what my passion is. That's what my job is. And I'm really, really excited about the things that we have going on right now. I have some really, really cool stuff coming in some of our next seminars. We're creating a whole multi-unit opportunity situation. Just really, really cool stuff. So that's what's going on, folks. Thank you so much for paying attention, for tuning in. Share this if you think it's helpful, and I'll see you soon.